You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for TWIFO, This Week in Futures Options, the program where, as the name says, we break down the week that was, and in some cases still is, from the other side of the fence's perspective, the futures options, the commodity options, all the cool stuff kicking over there in the ags and the metals, and some of the equity indices and FX and rates and all that other fun stuff that we don't get a chance to sink our teeth into too often on the other programs on the network. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs, 15 for you guys to keep track of at home, including many great archive episodes of this fun program, TWIFO. Easiest place to find it all, of course, the mothership, theoptionsinsider.com. While you're there, click around a little bit, read some articles, some breaking news on the options market, some education, some analysis, some unusual activity, all that fun stuff. It's all there for you. Keep you busy for many hours, and you want to download the audio, it's all there as well. You can go to your favorite platforms, your iTunes, and all that other fun stuff. You can also grab our mobile app if you're so inclined, you're on the go. And if you want to listen live, you can do so every Friday 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, MIXLR. So you can grab that link. We tweet it out all the time, put it in our newsletter, put it on the website, everywhere else. So if you go up there and grab it, all you got to do is grab it once. It's the same link all the time. And you too can join the live party. Speaking of joining me, we're mixing it up a little bit this week. My usual cohort, my partner in crime, Mr. Nick Howard of Bantic's infamy/fame. He's on assignment. He's out there traveling out there in London, hopefully having a little bit of a good time as well as getting some work done. But we do have someone joining me in the old CME hot seat. He's a returning guest. He's been on before, so at least he knows what he's in for, so it won't be too much of a surprise for him. He is Matt Bradbard, the Director of Alternative Investments over there at RCM Alternatives. Mr. Bradbard, welcome back to TWIFO, sir. It has been too long.
Thank you for having me, Mark. I feel like a consolation prize, but hopefully I can add some value, and looking forward to the show today.
Never a consolation prize, sir. We bring you on because you're out there, you're in the weeds, you're talking to the folks on the institutional side and on the retail side, so you're getting their pulse, you're getting their flow of what they're into, what they're active in, what they're trading, what they want to talk about. So that's what we want to talk about here on the show. So you're a good fit here for TWIFO. So maybe even before we get into some of that fun stuff, let me ask you, kind of give us a bit of a encapsulation, a synopsis of your week, if you will. What was lighting up the phones over there at RCM this week? What was really catching your eye? What were your clients asking you about?
Yeah, I mean, volatility appears to be returning to some extent. I know that's tough to say when you have the VIX, hovering around the 10 level, but you are seeing some movement both on the bullish side and bearish side, as you kind of alluded to in, energies, crude oil poking its head above 50. You're still seeing a steady sell-off in the livestock complex. This time of year, you always see some weather scares. We get a little bit of precipitation. The weather changes day to day. That gets corn, soybeans, and wheat moving. The financial indices continue to climb the wall of worry, making highs, as I'm sure we'll touch on later in the program. You had a couple central bank meetings this week. You got a Fed meeting next week. So, not any real standouts, although, just looking on the week, the best performer, worst performer, which I kind of keep my eye on, it looks like lean hogs were the worst performing commodity, and so far the best performing, or I guess the market that's moving the most on the advanced side is VIX, which it's all relative if you're starting sub 10, but hopefully for my clients we continue to see volatility stay in the marketplace. We don't necessarily like a flat market. We like movement, whether that be up or down.
Yeah, it's funny you should mention that because we just got off our Volatility Views show a little while ago, and the refrain on that program for the better part of the past pretty much 6 months, better part of 2017, has been, where the heck is the vol? Where did it go? Where can we find some more? And most of the trades we've outlined have all been primarily selling volatility type strategies to harvest the quote unquote risk premium. It's kind of been the trade du jour for better part of the last year. And then just this past week, we've started to note, and maybe the last 2 weeks really, we've started to note some more trades coming in and maybe speccing on preparing for perhaps that worm to turn, maybe a little bit of vol rushing back into the space. Again, people are usually hedging something OTC when they're doing that, so you can't read too much into it. But still, they're taking that effort. They're spending the money to put on those hedges or indeed those specs. So who knows? So maybe in aggregate, Matt, all of this smoke means there's a little bit of fire lurking out there, which wouldn't be the worst thing. I know you guys over there probably wouldn't mind a little bit of vol coming back into this marketplace after, shall we say, the extended, protracted downturn that has been 2017. Would you agree?
That was a polite way of saying absolutely. Yeah, we open more vol. We would like to see more vol. Now, that doesn't advocate I want to see the VIX at 20 and a 5% sell-off in the stock market to get us there, but we like larger than 10 handle trading range in the S&P where it's like watching paint dry. I do welcome that. Yeah,
let's get into it then this week. Let's break down some of the hot products that are lighting it up this week. I know you like crude, so we'll get into crude in a little bit. All of our listeners like crude. Before we do that, though, like you mentioned, by the way, cmegroup.com/TWIFO. That's where you can go to follow along with the reports for your very own. You can pick your products. If you want to talk crude, you can look at that. If you want to talk lean hogs, you can get in there too. Whatever your product of choice is, cmegroup.com/TWIFO. And you too can follow along, generate your reports, and see exactly what Matt and I are looking at. So when we're looking at these reports here, and if we do that, you can break down some cool scans. I'm not sure, we haven't really talked about the scanning features a lot here over there on QuickStrike, but it's pretty cool stuff. And it allows you to do stuff like this, like pick, hey, what are the hot winners and losers this week? You can look at it from a net underlying movement perspective. That certainly is one way to do it. Since we're an option show, we like to focus more on who's lighting it up from a volume perspective out here this past week, who's adding some open interest, who's closing it out. And so I'm not sure, you probably read the notes, Matt, so I won't make you guess, but because then it would be cheating. But in general, there are surprise product of the week in terms of what was really adding some open interest. Again, it's all relative. This is a percentage basis now, so it's a small number. They add a little bit more. It's a big percentage gain, but still, the New Zealand dollar lighting it up this week, Matt, to the tune of nearly doubling their open interest out there, which is kind of interesting. These small names, we don't get to talk about them too often here on the show, but this one kind of lighting it up. In particular, the series that was really lighting it up was the October series out there. So October in the New Zealand dollar, the top OI gainer this week, and the big loser of the week were the Ultra U.S. Treasury bonds, losing, that's about over 6% of their OI this week, shedding some OI there. So interesting stuff. A few surprises there. Would you agree, Mr. Matt? I bet you didn't come on here thinking you're going to talk about the New Zealand dollar today.
Yeah, I have. I lived in or traveled, for a month or so in New Zealand about 15 years ago, not to date myself, and that's the last time I really checked at, what the New Zealand dollar was trading at. So that did catch me a little bit off guard. I agree with you.
Did you make it in time for the Lord of the Rings movies 15 years ago? Did you get to see all the sets?
Yeah, it was great. I mean, second favorite place behind Australia, which, at that time the Australian dollar or the U.S. dollar was strong, so it was a lot less expensive than it is currently.
Cool beans. I actually haven't had a chance to go down there and see that. One of these days I will go down and see Hobbiton and all that fun stuff. Let's move on into the realm of some products that are actually traded. New Zealand dollar is fun. Bit of a surprise. We like to have our surprise products of the week. Let's move into what was lighting it up. And once again, a lot of people focused on WTI, a.k.a. crude, this week. We saw an interesting, I guess you can call it flirtation with some higher levels earlier in the week, Matt. In particular, it was pretty much yesterday and getting into Wednesday where we saw the getting its recent about 6-week highs, getting about 47.71 up there in the front month. So flirting with some higher levels, but it couldn't really threaten that 50 handle level again. Still hitting about 6-week highs. A lot of that was driven by talk of the declines in crude supplies here in the U.S., which is, of course, a big driver of price. OPEC can do its thing, but if U.S. still has huge glut of supply, it's going to weigh on the price internationally. So seeing a decline in those supplies spurred a little bit of hope, a little spark of life out there in the crude bulls. Unfortunately, it was short-lived. Crude actually ending the week down a little bit, off about a half a handle to about a handle, depending on where you're looking out there in the term structure, right around the 46 level out there. So the brief flirtation that it may have had with 50 in the rearview mirror. Now, of course, people are gearing up, Matt. There is that meeting from the OPEC oil ministers there. I believe it's on Monday over in St. Petersburg, where they're going to pretty much play a little bit of a scorecard, see how people are keeping up with the cuts they're supposed to be making out there for OPEC. Includes some non-OPEC players as well, like Russia and a few others who tend to muddy the waters sometimes and they don't go along with OPEC's guidelines. But still interesting stuff. Matt, I know you focus a lot on WTI and crude, and a lot of your clients do too. What was catching your eye out there this week from a crude perspective?
Yeah, I mean, you've certainly bounced, we're $5 higher in the last 6 weeks or so. What I found interesting is like a day like today where crude's getting kicked and, the dollar is as well. Usually you see an inverse relationship there. I mean, you have a little bit of a tug of war if you look at, $5 out of the money calls, $5 out of money puts. I mean, that's where a majority of the open interest is, at least in the September contract that expires mid-August. So they have about 28 days on it. I peaked out till the end of the year, people that are trying to take a stance between, now and the end of the year, a little bit more time. Not any outlandish bets. I mean, I found most of the open interest with December crude straight around 46, just about 46 handle. You have on the put side, there's about 38,040 puts, about just over 31,035 puts, and then to no one's surprise, about $5 to $10 higher is where the open interest on the call side is. It would appear that there's a decent-sized position. I mean, the biggest open interest I found in December on the call or put side where there was over 61,000 $60 calls, and there's some very bullish people out there that there's actually over 7,000 for your open interest looking at the $100 call. So either they're looking for crude to advance significantly. I can't imagine that they go intrinsic, but they certainly could gain value if you see crude put on $10 to $15. I think the market will react, early next week to what OPEC does or does not do. But it's going to be difficult for crude to get much cheaper than 40 and much more expensive than 50. I would continue to play that $10 range. Be a seller near the $50 level and be a buyer near the $40 level would be my stance.
100 strike calls. That's shall we say, fairly optimistic, I think.
Yeah, I got a kick out of that. I mean, there's over almost 7,100 of them. So
there you go.
Somebody's bullish.
Hopefully that's some legacy open interest they maybe just never closed as opposed to new positioning. We'll have to dig in and see. But that's interesting. I was going to ask you for your outlook. Sounds like you just gave it to us, which is interesting because, there are crude bulls out there. But as we saw this week, it is kind of struggling to get north of that 50 handle. A lot of that is, the higher that price ticks, particularly when it starts getting into the mid to high 50s, and certainly if it gets, let's say something like 70, then you see all these other producers domestically, and of course the shale can start coming online, and they just knock that price right back down. So it seems like there is a built-in ceiling, at least in the near term, for things like WTI. But that said, I don't know if I would go 100, you're right, but it is interesting to think of, what scenarios could drive us to that level. It'd have to be some sort of real aberration. OPEC would really have to, I think, take the reins pretty aggressively and really just crush all other production. But then, of course, same problem happens. All these other suppliers come back online and we're right back to where we were. So it is an interesting scenario. I don't know about you, but I don't really foresee a lot of scenarios where we can get substantially north of, let's say, 55 or maybe 60 in the near term. Sounds like if you're selling that strangle, you probably agree.
Yes, agreed.
Let's move on to what was lighting it up out here. You mentioned some of those crazy strikes, and there are quite a few of them. It was a pretty active week out here for WTI. Open interest up about 7%, so a big gainer out here in terms of volume week. It seems like it's always a pretty hot week for WTI, but right now, this week, lighting it up yet again, even though the futures said settling off, net off about a little over 1%, almost 2% on the week. All this kind of back and forth, not really driving a huge amount of vol out here in crude. A bit of a mixed bag out here when you're looking at where the vol is on the term structure. Some months a little bit elevated, some months a little bit cheaper overall. And when we're looking out here at the vol skew, it's still pretty much a similar phenomenon where we're seeing the puts got some juice and the calls not so much, and that hasn't really changed markedly so for a little while out here in terms of the quick skew. Again, I encourage you to play around with that if you haven't done so. The quick skew, really interesting stuff. Shows you, not just a skew general number, but really what's going on. The call wing and the put wing separately. You can see them kind of moving independently of each other, which they tend to do. So that's information that is fairly useful. We use it all the time, at least, and I think you guys will as well. In terms of what was lighting it up out here this week, once again, it was pretty much the main monthly, the front month, that was lighting it up to the tune of about nearly 60% of the paper going up out there in September. The number one hot strike in crude out here this week, number one with the bullet, the SEP 50s. So people maybe some hoping they're going to break the 50 strike. Maybe a lot of back and forth. A good number going up today as well. Today a fairly active day out here in WTI as we're giving up some of those recent gains. A total about 52,000 of these bad boys lighting it up this week. About 12,000 so far today. 13,000 going up yesterday and 17,000 on Monday. Net slightly opening, about 10% of that opening, about 4,000, a little less than 10%. So a little bit of opening, but a lot of back and forth on that strike, as you would expect. It's kind of, a lot of people are fixated on that right now. Will it break it? Won't it break it? How can it break it? And so a lot of back and forth trading on that strike, which is interesting. Also, a little tighter, Matt. You were talking 50-45 strangle or risk reversal. They're talking here 50. You're saying 50-40. Here we're seeing 50-45 was lighting it up this week with the 45 puts out there in September. The number 2 hot option out there, 33,000 of those, including again about 13,000 lighting it up today. So today a very active day out here in terms of crude options, and the rest of the week pretty much evenly split. Again, about 4,000 and change opening there as well. So interesting stuff. Let me drop off a little bit to number 3, the 52. So a little bit more optimistic. The set 52 is doing about 28,000 and change. Again, about 13,000 lighting it up today. The rest of the week pretty evenly split. So SEP was pretty much active and all very much in that very tight, primarily 45 to 52 range where the lion's share of activity was. You got to go down a little bit to find the 40 puts. They weren't as active this week as you might think, given their kind of seminal psychological level. Only about 15,000 of those lighting it up this week, including about 5,000, about a third of those coming in today. There were some other prints worthy of note. Dees 55 calls lighting up a little bit this week, so a little bit more optimistic, about 11,000 total of those going up, including about 5,000, so just less than half going up on Tuesday this week. A good chunk of those actually closing, so maybe someone giving up the ghost there on the 55 strike. If you go farther out, we actually saw a little bit more, shall we say, some interesting mixed paper, including some bearish paper out here with the June 2018 35 puts lighting it up. So getting outside the bands of your strangle out there as well, Matt, with about a total of 6,000 and change, 6,500 to be precise, most of that opening. So someone coming out here and opening fairly aggressively on the 35 strike out here in June of 2018. So long-term bearish paper, the lion's share coming on Tuesday, about 3,600, and then a couple of blocks, about 1,200 and about 1,700 going up on Thursday and Tuesday, respectively. And again, the good chunk of that opening. So someone opening and doing so for a wee bit of size out there in good old June of next year. And not to be outdone, Feb also getting a little bit as love as well. Also the 35 puts. So that 35 strike seems to be lighting it up. About 1,000 or so trading. Pretty much a good chunk of that opening as well. So Feb 35 puts. For some reason, the 35 strike of interest. Also Dees 2018 35 puts. So maybe that's the new strike du jour, Matt. Maybe the bears are back out. The Dees 2018 35 puts lighting it up to the tune of about 4,300, including actually about 3,000 and change of that opening. So again, a lot of opening downside positioning. Does that surprise you, Matt, that we're seeing fairly pessimistic, fairly long-term downside positioning? I mean, it's not overwhelming the upside we're seeing in the front month, but still longer term, that does seem to be one of the bigger plays. The 35 strike lighting it up in multiple months. So does that surprise you that they're going even beyond the lower band of your strangle there in WTI?
Yeah, I mean, I can't imagine that going intrinsic. I mean, it's a 25-30% drop from current trade. You do have some time in there, but, maybe they're just looking to buy the premium, see a move lower, and then roll them out or roll them lower. But, it's a big move from current trade. I mean, you would have to see the fundamental shift dynamic. I mean, there would have to be some market shift to see a 25-30% drop in, 8 months' time. I don't see it, but that's what makes a market. I mean, somebody clearly sees it, and somebody took the other side and is looking to keep that premium because they see the floor being held at 42. I'm in that camp.
Yeah, it's interesting. It would take a lot. I think a lot of U.S. supply and some other supply would have to come online and remain online even as that price declined precipitously, which is a interesting scenario to imagine, but still, weirder things have happened out there. And if you're a bull, don't be too upset. The longest term paper we saw actually were the Dees 2019 50 calls lighting it up to the tune of an even 1,000, a nice block of 1,000 going up on Wednesday, pretty much all that opening. So the bulls are, even that's really not that bullish. 50 strike all the way out, Dees 2019, that isn't that unrealistic. So interesting stuff nonetheless. Didn't see a lot of super crazy paper paper, people lighting it up. We mentioned the 100s, so interesting stuff. We did see a one lot of the Dees 2019-90, so there you go, Matt. Some weird paper lighting up. Did see the 70s as well this week, also the Dees 2019-70s. And they went up on Wednesday as well, so potentially a vertical there, 50-70 vertical, which would make maybe a little bit more sense than just buying the 50s outright. Either way, interesting stuff nonetheless here. It's been interesting. It's always an interesting week when you're talking crude, Matt. Any last thoughts on crude before we move on to perhaps some other products on the docket this week?
Just, I don't know if the audience heard that both those guys could be right, or both those trades could be right. I mean, we could have a massive move to 35 in the next 6 to 9 months and then pop up to 50. I mean, it's not out of the realm of possibility that you could see a $10 to $15 move either way. So we'll see. I mean, I'm going to continue to operate under the assumption that we're going to stay in this trading range until we trade out of the trading range, and then I'll change my opinion.
There you go. Spoken like a very practical, pragmatic man that I know you to be here. Let's talk about. Now, we talked recently on the show last week, actually, Matt. We don't get a chance to talk a lot of ags out here on the show. It's usually crude and gold and all the other ones people are interested in, maybe some equity indices. But we did see some interesting action in the ags, in particular corn. It was kind of vacillating all over the place for a while. They're actually settling it out on the week, not that big of a change, only up about 5 or so handles, about 1%, but it did rock around a little bit more than that. Intra-week, which is always fascinating for us and always leads to a nice bit of action out there for us to parse from an options perspective. Again, an active week out here in crude, about open interest up about 7.5% actually, so fairly active stuff. And of that, about 60%. So the whopping lion's share coming in that SEP contract. So that's where the action was. These ags tend to trade very cyclically. A couple of months really light it up. And in this case, it's the SEP contract. And if you're wondering, the corn finishing the week up here right around the 380, 390, a little bit farther out in the term structure, but depends where you're looking. 410 all the way out there. But right in that range, and we saw the number one with a bullet strike this week out here. In terms of all things corn, were the 400s, the SEP 400s, with about 51, almost 52,000, contracts lighting it up with 18,000 and change coming on Wednesday. That was the lion's share of the action there. The rest kind of spread fairly evenly throughout the week. Only about 5,000 of that total opening. So a lot of back and forth on that even number strike. And then we fall off quite a bit to number 2, which are the 410 calls. About 27,000 of those lighting it up back and forth pretty much all week, pretty much net unched from an OI perspective on the week. So a whole lot of back and forth on that strike throughout the week. Number 3, the 360 puts, a bit out there, 20,000 and change of those. Again, net pretty much unched from an OI perspective on the week. So again, a lot of back and forth trading, fairly even throughout most of the week as well. In terms of the vol, that's also kind of a bit of a mixed bag, again, depending on where you're looking out here on the term structure. It has been an interesting one to watch out here, as corn has been delivering a little bit more vol of late, which is always, I think, interesting to watch. And, of course, for a lot of our equity option traders who are listening and saying, I really can't get a lot of juice in the big indices or even a lot of single name equities right now, this is an interesting time. I know a lot of them are starting to look at the other side of the fence, the green side for the ags, and of course getting into some crude and some gold as well. So there are pockets of vol if you can look for it, even if net on the week corn was a little bit of a mixed bag from an overall vol perspective. Look at that skew as well. It's kind of been interesting to watch. The ag skews are always kind of funky. Those calls getting a nice little rich bid out here of late. So maybe if you're in corn looking at some covered calls or things like that, that may be an interesting one as well. Also, the puts coming off a little bit, so maybe there might be some interesting opportunities to set up some collars there where the puts aren't super, super aggressive, and yet the calls are kind of rich. So if people are writing in these days saying, hey, where's a good and attractive collar? They were asking about silver and gold and some others recently, and soybeans. Maybe corn might be starting to look a little bit more favorable in that direction if you are so inclined. And if you get the farther out paper all the way out to Dees 2018, we did see about 1,100 of the 420 calls out there in Dees 2018 lighting it up. So that's kind of the longer term, most sizable paper that we saw. About 1,000 of those going up on Monday and some scattered small size the rest of the week. So some fairly interesting activity Matt, I know you focus a lot on the equities and also on crude, but I know once in a while the ags light up your tape as well. People hitting you up this week on corn, and if so, what were they talking about?
Yeah, I mean, it's all about weather. We've got rain in the last 24 hours. That's why the market's tapered off a little today. It hasn't been as hot. Never trust a weatherman, but if rain's in the forecast, ags will come off. If you don't get rain, they'll heat up. It's very late in the growing season, so there's been damage done to the crop. The yield's not going to be there for corn. We got a little bit of time, so if weather cooperates, maybe we'll save some yield on the beans. If people are looking for volatility, I mean, beans are going to be more volatile typically than corn, although on a day like today when you have beans, only, what are we looking at? About a nickel trading range, and you have corn at a 15-cent trading range. Don't judge that just on today's activity. Usually beans are a lot more volatile. Of course, they're over 2 times the price as well. What people need to be careful, as opposed to trading like a financial, though, if you look at the December 2017 corn, which is this year's crop, and you want more time and you go out to, say, December 2018, that's next year's crop that isn't even in the ground, hasn't been planted, no idea how many acres are going to be allocated to it. So you could see a significant move, and I'm not talking about, a extreme bullish condition in one crop year and an extreme bearish in the other, but there could be a disparity where one outpaces or underperforms a lot more. So just be cognizant of that. If you're looking for any type of fade or play, recognize that it's an entirely different crop.
Yeah, all the logistics of the delivery and the harvesting and the planting, I think for a lot of newcomers to these products can be a little bit intimidating at times. And so it's definitely worthwhile to be cognizant of those levels. If you're just looking at it from a pure options play perspective, there's a lot more that goes into those fundamentals of the ags. So make sure you do your homework before you dive in. Speaking of diving in, we do like to get to some of our listeners as well. But before we do that, Matt, I'll let you call an audible. You're kind of playing along with me, playing co-host here on the show this week. Were there any other products that really, to your eye, really lit it up, really caught a lot of attention, or really lighting up the phones this week at RCM? If so, what were they, sir? Have at them.
I mean, I think not one particular commodity, but perhaps a sector as a whole. It's like the forgotten stepchild in the commodity sector is the soft commodities, which a handful of my clients trade, a handful of traders that we work with trade as the soft complex, which are, cocoa, orange juice, sugar, lumber, coffee, and cotton. I think, there's enough vol where those markets should be at least on one's radar, and they're small enough that, you could see 1 or 2 players come in and really move the market around. So, you see some movement, I guess, just going through, you randomly pick a couple of them, like OJ on the week is up 3%. Sugar prices are, hovering off. They were at 12 cents a pound. A month ago, they're at 14 cents a pound. And then, coffee is a market that we look at as well. Coffee prices, we just passed South America, where this time of year they generally get freezes. We didn't see any of that, but supplies are extremely tight, and there could be potential for a short covering rally. So I know on this program, and for the most part, when investors are looking at commodities, they're always looking at, energies, they're looking at metals and maybe some of the financials, but some markets off the beaten path like livestock, lean hogs, live cattle, and some of these soft commodities I just mentioned, don't ignore those markets, because there's money to be made and clearly risk to be had. But, that's the only thing I would add is look at some of these more obscure names.
Yeah, it's funny you mentioned that, because we have talked about very briefly on some recent episodes. We had some people write in asking us about some of the more esoteric products out there on the old CME platform, and lumber came to mind. In fact, I have lumber up on my screen right now. I'm just looking at it, and you can be the big player out here if you just trade a little bit. This thing traded a whopping 199 contracts this week. So you come in here and start doing a 10 lot, you're a size player out there. So interesting. Also bear that in mind if you're going to play in these. But you're right. The OJ, the coffee, lumber, these names don't get a lot of a lot of love because they don't print a lot, quite frankly. But I think it's worthy of note. Do you have a lot of clients over there at RCM who play in those, or is this something starting to become more of an interest factor for them as they're migrating farther away from some of the mainstream products that don't have the vol they need?
No, we have guys that trade everything. I mean, whether it's a small speculator or a fund that manages money for investors. Clearly, if it's a billion-dollar fund, they can't trade those markets because they don't have the depth and capacity. But sub $100 million funds, they're trading sugar, livestock. I used to joke, and I know the floor really doesn't exist, but you go in the pit and there's hundreds of S&P traders, and you go in the lumber pit and there's probably 2 or 3 guys that are buying and selling lumber to one another. So, you have to know what you're getting into. And to Mark's point, there's not a lot of players in there, so you can get caught with your pants down. So, pay attention. But yeah, we have clients that pretty much trade everything.
Speaking of everything, I'm sure a lot of them, you mentioned at the top of the show, a lot of them probably sling a lot of the E-minis and the S&P, and they're trading in that area because it is obviously a very hot product. A lot of issues out there, a lot of interesting trades out there, and of course, a lot of questions about the vol out there. I'm curious, you kind of alluded to it at the top of the show. What are your clients up to out there? Are they like seemingly everyone and their grandmother out there aggressively shorting a lot of the volatility out there, or are they starting to maybe position for something else to happen out there? What are you seeing out there from the people you're interacting with?
I mean, some of the best performing traders out there for the last couple of years have been, selling premia. I don't necessarily agree with it, and it's a little bit scary. It may be one of the things that keep me up at night. Trading VIX directly, it's kind of been on the limelight. We did a webinar a couple months ago. We've put out a couple white papers, and it seems to be in vogue right now where there's a lot of managers and investors out there trading some type of VIX product directly, whether that be VIX futures. I know there's a bunch of ETFs, ETNs, VIX options. It's a buzzword right now, that in combination with machine learning, artificial intelligence, quant, VIX, those are all the buzzwords right now, as your listeners know.
Yeah, it has been interesting to see, and we'll see if some of this positioning in the S&P and some of the related volatility products could amount to something, or if it's just a lot of people, posturing, and we're still going to have this inevitable slide that we've seen out there in the broad equity volatility, as despite what's going on in the macro geopolitical environment, despite what's going on from an earnings front or a political front, volatility just continues to erode. It's been an impressive thing to watch. I don't think if everyone I talked to, including myself, if we had to wager coming into 2017 with a new administration, if we were to guess whether the new administration would add or remove vol from the marketplace, everyone would have said this is going to be a hugely volatile thing. I think I had a guest coming on right before the new administration took hold, saying President Trump won't be a single-digit VIX president. That's exactly what we've seen for almost the entirety of his presidency. So it's kind of been, I think, a little counterintuitive to just about everyone out there. Speaking of everyone out there, let's get you guys involved in the show. It's time for some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome back to the Futures Options Feedback, like the Matt said, the portion of the show where you guys get to take the reins, ask us your questions, give us your insights, your pearls of wisdom. We also get to ask you guys some questions every now and then. We did a little flash poll before the show, Matt, and if you're not on Twitter, then you won't see it. If you are, then you can cheat. This is where you're on the honor system. But we asked everybody a little flash poll, which futures options product had the largest percent change in open interest over the past week. The caveat being this is up to when we posted this, which I believe was late Thursday. So the data is reflective of that. May have changed by today, but up until Thursday, we gave them 4 choices, Matt. We said the Emini Nasdaq 100, the copper, a live cattle, or soybeans. I'll give you 2 answers you can give us. I want you to give us what your vote is, if you have one, and then B, what you think our audience is voting for.
Oh, that's a great question. I would say live cattle is my vote, and the audience is voting for Emini Nasdaq.
Interesting. Pretty close. It's live cattle is a good guess because they come from a small number, and so moving a small number doesn't take a lot. But they did pretty well. Live cattle gained pretty much double this open interest this week, but that wasn't enough to take the top spot. The top spot was actually the Emini Nasdaq 100. It went from 111 contracts open to 320. So it did about 188% increase in open interest. Again, usually the smaller contracts that top these lists. Number 1 was Emini. Number 2 was copper. In particular, it goes by months as well. So it was the October contract in copper. These are not net additive. These are kind of by breaking down by months a little bit. Then live cattle in September. And then wheat was actually number 4. We didn't even put that on the list. But we gave you guys those choices with soybeans mixed in there. And actually, soybeans won our poll, Matt, with 50% people choosing soybeans. So not a bad guess, even though soybeans are a little more active. Kind of hard for soybeans to top the list. But they did all right, followed by 25% picking Emini and 17% saying live cattle. Only 8% giving copper some love. So no love for copper out there. Let's move on to some of their other questions we got out here. Here's an interesting one. Actually, Matt, let's get your thoughts on this one first. We were talking, I think it was a couple of shows back, someone wrote in asking us for our thoughts on the craziest, weirdest, most kind of esoteric product that's actually listed on CME. And they get into the weeds, some of these weird products. And so we've gone back and forth. We had a CME rep on last week. He gave us his thoughts. And I won't give you our answers yet because I don't want to skew you. But we had some interesting thoughts for what were the weirdest products. This person, LilChech, I like that. He says, my vote for the craziest CME product is oats. Who trades oats? Oats actually, I think I can pull up the number right now. I could tell you exactly how many people are out here trading oats. If you give me a couple of seconds here. There we go. Talking oats options now, not into the actual underlying. 203 oats contracts changed hands this week. So it does do a little bit of paper. Not more than a lot of other ones we would see. But Matt, I'm curious for you, what would you say, you've been around the space for a while, you play in some of these esoteric contracts like lumber and others. What would you say is the weirdest thing you've encountered out there in your years of slinging these products?
Oats is a pretty good vote. I used to live in Florida for about 12 years, so everybody thought I was an orange juice expert. I think orange juice should make maybe top 5. There's so many different, fixed income products and derivatives of fixed income products. There's the Korean won trades on the CME. I don't think that's probably got a whole lot of open interest. I spoke to a gentleman in Idaho this week that wanted me to try to hedge propane for him, which I can't do. It's a tradable market, but there's just not a whole lot of open interest there. I'm just going through a list of some CME silly markets. Butter, cheese, we've got to make top 5, 10 markets as well.
Yeah, I think we came down the side of some of those weird dairy products like dry whey and things like that are just so bizarre.
You'd be surprised, though. Milk trades a ton. Milk is like one of the most traded commodities, which I didn't really realize, but and that trades on the CME. Milk, there's a couple, non-fat dry, class 4, class 3. I don't know the difference between any of them, but apparently you can get them at your local Whole Foods.
Yeah, they do trade more than you think, and you're right. We kind of went through that on a recent show, the different classes of the dairy classifications. You can kind of get lost in the weeds there on that stuff. But it is kind of fascinating for a lot of our listeners when we start parsing some of those more esoterics. We came down, I forgot which one exactly it was. It was one of those one of those milk or dry whey type of class 3 fluid milk. One of those ones I think was our winner by default, but it's a subjective thing, which is kind of interesting. Speaking of. This is not so subjective. This is Eve 4. I think following in, some other people have asked us similar questions in recent. Everyone wants to know about collars, how things are setting up. People asked us about gold recently. She said you talked gold a few episodes back for collars. She says silver's been selling off. Is this a good time for a silver collar? So I just pulled it up while we were talking. Again, the quick skew is kind of the best tool for that. And that in an environment where you want a collar, you want a fairly maybe downtrodden underlying. You could argue whether silver is there or not. It has taken a beating of late. It's kind of rallied this week, but net, it is kind of net down, so that might be attractive for you. And you also want puts that are fairly cheap, so you can buy fairly tight protection without costing you a bundle. And you want calls that are nice and juicy and super overpriced. And we're not really seeing that right now. So in fact, if you went back like a week, it would have been a better time for a silver collar. The puts were cheaper, the calls were more expensive. It was much more favorable to log. I think that was kind of in the teeth of the sell-off there, and so you saw maybe some people were maybe coming off the heels of that. The sell-off had kind of turned around, so the puts got cheap. Whereas right now, it's kind of the puts are a little bit more expensive, and the calls are kind of eh. So yeah, I wouldn't say this is any sort of super favorable time for a collar. Maybe pick your poison. Maybe you do some put spreads to have an extra financing leg on the downside, and maybe add something else like that with the collar. Maybe you just kind of hold off a little bit and wait for those setups to line up a little bit. Matt, you guys do a lot in the metals. Probably more gold. Do you do a lot in silver at all over there at RCM?
I mean, I like silver. I constantly pay attention to the gold-silver ratio. It's at 76-1 right now. I mean, like soybeans and corn, they're generally, correlated to one another. Soybeans just a little bumpier ride than corn. I equate silver and gold similarly, where generally they're moving in the same direction, but silver is going to be a bumpier ride. Both markets have come off. Gold and silver significantly in recent years, have been in a downtrend for the last 6 to 8 weeks, and they're starting to show signs of life over the last 2 weeks. Forced into the market, I think I would rather be long than short, and forced to pick between gold and silver. I think you can get some more value in silver. I see more upside potential in silver than I do gold.
Hard to argue with that one. Let's see what else we got here. Oh, here's a good question. This comes from Antim. He wants to know, how far out can I go in most CME options? I'm looking here. Can I go out as far as a leap? A leap, if you're not familiar, listeners, are equity option products. They stand for long-term equity anticipation securities. They typically go out longer than a year, somewhere in the 1 to like 2.5 to 3 year range, depending on how far out the product and particularly they go. They typically don't go much farther, really, than 2 for a lot of those things. That's usually how far out you can go on the equity side, equity option side for most big listed things, about 1.5 to 2 years. And it's a fairly similar time frame for most CME options. The answer in the short is yes. And in longer answer is that it kind of depends on the product. I just pulled up silver, for example, while we were talking earlier. Those went all the way out to Dece of 2019 and the active kind of listed products out there. So you get about a nice 1.5 out there. Looking at the E-minis, I see them all the way out to June of 2018. I think there should be some 2019. I'm not. Maybe I'm hitting the wrong. I don't see a 2019 for the minis, which is kind of interesting. But most of the products, I think, will probably go out to that range. You see about Dece of 2019 or so. So about a nice 1.5 or so. Some will go a little bit longer. Some will go a little bit shorter. But right around a similar time frame, I think you can find for most of the leaps. Which is interesting. You get this question because it seems like most of the other questions we get are kind of on the other side of the curve. They want to know how short can they get. They want to know are the dailies coming. They want to get short duration. They're all about weeklies and short duration contracts. Not a lot of people are asking us about how far out they can go, which is kind of interesting. Maybe also why there aren't as many choices out there, just because there aren't many players out there. Matt, what are your thoughts? So you can think of some products off the top of your head that can go out. You can go out crazy far without having to do something like OTC or anything like that. And then also, do you agree that a lot of your clients these days are maybe on the other side of the fence? They want to get really short duration. They want to get into the weeklies, and they're not calling you up saying, hey, can I buy a 3-year put or a 4-year put in crude?
Okay, so a couple questions here. First thing, is there any that you can buy an extended period of time? Yeah, off the top of my head, I mean, fixed income, euro dollars, short end of the curve, not long end. I'm not talking 30-year, 10-year, 5-year, but the short end of the curve, you can go out 2, 3, 4, 5 years, plenty open interest, massive volumes, great way to play U.S. interest rates, although it's, again, been watching paint dry here. So I don't know if it's the most effective use of, buying or selling premium. But to Mark's point, I guess the second part of the question is, yes, clients are generally looking for shorter time frame, especially if they're premium. I guess if they're premium buyers, they don't want to spend that premium. And if they're premium sellers, they're essentially looking for that option to expire worthless. So I would say I'm taking the other side, where most of the guys that we deal with are looking at buying or selling options inside of 30, 60, 90 days. And it's a lot easier to predict, not that it's easy, but easier to predict what's going to happen in the market in a short time frame versus what's going to happen over a 6, 12, 18-month time frame, which is much more challenging, as your audience knows.
That's a good point, about the rates. I mean, I obviously discounted, the 30 years and stuff, because that's kind of crazy. But you're right, I didn't neglect the 5 years on the euro dollars, probably because you're right, they don't do much, so they're not really on my radar. But they are out there, so if you want to go listed, active, longer term, not really too exciting, but they're there. You can go about 5 years in the euro dollar. So that's nice, easy. It will trade, so you can get in and out reasonably. It's not really doing much, but you can do it. So I did neglect the euro dollars there. Good point. That's why I have you on, Matt, to catch the ones that slip past me here on the old show. We're firing on so many cylinders here. You can't hit them all, right? Let's see. Here's a good one. I'll be curious for you, because you come at it primarily from more of an underlying futures perspective, and you kind of gotten into the options later, versus I come to it obviously as an options guy first and foremost. We get this question a lot. This one comes in particular from Bullseyes. I don't know how you pronounce that. Somewhere along those lines. We get this theme a lot, and he's asking, are options worth it for day traders or just for swing traders? Interesting. I have some thoughts on that, but I've talked about this theme before. I'd be curious to get your thoughts here, Matt. So when your clients call you up and they say, hey, I want to capture very minute intraday swings in a particular underlying, are you sending them to the options, or are you sending them into the futures?
The latter. I mean, if they're looking to day trade, scalp, open, close a position inside of 24 hours, futures. I would say swing trading is more appropriate for options. Now, that being said, if you want to buy an inexpensive lottery ticket to play a USDA report, a Federal Reserve, a central bank, an OPEC meeting, you could certainly day trade an option that way, assuming, you hold it into expiration. It is then executed into a futures contract if it's intrinsic. So not to blow smoke, I'd say for the most part futures, but there is a way to do it with options, but it would then probably be executed into a futures.
Yeah, I'm with you. People think I'm an options guy, so I automatically always say options. And I do mostly trade options as opposed to underlying, but there are use cases for the underlying, and scalping and doing intraday tick by tick kind of trading is a perfect use case for that. I'm not at all averse to that. People call me, or they don't really call us. They usually write into us and say, hey, what about that type of use case? Whenever I hear that, I'm okay with that, or the underlying stock if you're going to go that way, just because it's very hard to capture those minute fluctuations with options. It can be done. I mean, it happens. You have intraday moves in vol, and you have intraday moves in and obviously the delta, but those are a little bit more fewer and far between. Whereas if you just want to scalp some deltas, the Delta One products, that's the easiest place to do it. That said, the growing litany of short duration contracts, the increasing number of weeklies, the increasing number of expirations intra-week. So effectively, we're going to have dailies coming sometime soon in some products. So when you have names and expiring and popping off every day of the week, there's a lot of gamma involved, which you need to trade these short duration type things. So that makes it a little bit more, it's more viable to do it now in options than probably it ever has been. So I will add that caveat. If you are an options guy, you want to go intraday and trade that kind of stuff, there's more choices for you now, more options, pun intended, than ever before. But I still am okay with slinging the futures or the stock, whatever your call is on these kinds of things. And then we'll wrap it up. Matt, for whatever reason, people write into this show with their thoughts on Bitcoin and Bitcoin options. There's been a lot of news on that in recent weeks with the SEC approving the first SEF for Bitcoin options. Hopefully we'll have some actual products to be able to trade in the near future. People writing in what could go wrong, listing that kind of stuff, asking us if we can short it. A lot of thoughts on this. I'm not sure why this show has become the de facto Bitcoin show on the network, I guess because people lump it in with other commodities. But still, it's interesting. I'm curious, what are your thoughts on this, Matt? Do you think we'll see a viable Bitcoin actual listed, derivative market sometime in the near future, A? And then B, are your clients interested in this? Are they calling you up asking you about this? Or, what's your pulse on this stuff?
Do I think it will happen? Yes. Are my clients calling me up and talking about it? No. Don't have an opinion. I feel I missed the boat. It makes me sick to my stomach that I haven't bought or sold. I do have friends, and I think I've mentioned this in prior shows, that trade it, own ATMs that do Bitcoin. I have a buddy that runs a fund of funds that took a small position, and now it's become a bigger position, and it's the difference between him getting his incentive fee because he took a 1% position that because the capital appreciation became a 10% position. But I am not an expert in this, and I don't talk to my clients at all about it. But I would say within the next 12 months, it'll be tradable on the exchange, and then there's something for me to dig into and discuss further with existing clientele or prospective clients.
It's hard to argue with all the heat on this product at the very least. People want it, and I'm with you. I think we all missed the boat. Who thought this thing would take off the way it has and then sell off the way it has as well? So I'm sure there's pain on both sides of the fence. People who've owned it wishing they sold it earlier and vice versa. So a lot to be said there. Unfortunately, that music means we've come to the end of another epic. See how fast an hour flies by, Matt, when we're talking all things futures, options here on TWIFO. But before we go, I want to check back in with you, sir. You guys are always working up cool stuff. You got some events coming. I know last time you were on, you had an event you just did with, I think it was Eric Norland and the CME, economic team talking about energy products. What else is coming down the pike from you guys over there at RCM Alts these days?
I mean, the best way to follow us is our Twitter handle, RCM Alts, ALTS, and then we put a lot of content out on our blog, usually a couple times a week. We will have some webinars coming, some white papers. We are continue to grow, and you're looking for new office space. It's very exciting time. If this volatility can truly return, we're looking at greener pastures ahead, and if the stock market sells off, that may have the complacency that has seemed to set in with investors get people looking again when they get nervous. So I'm not wishing that upon any equity holders out there, but at least gets people thinking that they should be looking at alternative investments and looking for ways to diversify. And if they are, they can Google RCM Alts and find us, follow us on our Twitter, or read our frequent white papers and blogs that we're putting out on a fairly regular basis.
There you go. Check them out, RCM Alts, for all their stuff, or just search for RCM Alternatives and all the other handles that were in there and subcategories, the wealth advisors, the futures, everything else, MISC, as I like to joke, all of that over there at RCM. Also, I want to mention our friends over there at Quick Strike. Couldn't join us on the show today. Check them out. Easiest place to kick the tires for yourself, completely free. CMEgroup.com/TWIFO. This week in futures options, you get access to all these reports we're using right now, completely free. Kick the tires and light the fires, as they say. While you're over there at CME Group, maybe check out the old CME Institute as well. Rebranded. Used to be the Futures Institute. Now, just the Institute. Because guess what? They talk about more than futures. They talk about what we talk about here on the show quite a bit. Options. So if you have questions, and a lot of you do, judging by the questions you send to us, head on over there and maybe they can answer some of them for you. And on behalf of Matt and even Nick, who's out there on assignment, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show. And of course, sending in such great questions. Keep them coming. And we'll see you next time for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.